Hello everyone, and a very warm welcome to Namaste Web3 presented by Forbes India and Coindcx, making India Web3 ready, supported by Bharat Web3 Association. I am Swati Shahi. Well, as we gather here in Mumbai, the financial capital of India, it seems fitting to begin the evening with a quote from the legendary investor Warren Buffett. The most important investment you can make is in yourself. Well, today we are all making that investment by exploring the frontiers of finance and technology. We're extremely elated to bring the Mumbai chapter of Namaste Web3 to all of you. This city, with its rich history of financial innovation and its status as the beating heart of India's economy, provides the perfect backdrop for our discussions today on next-generation investment opportunities. As we embark on this journey, our mission today is to unlock next-gen investment opportunities, which also is the theme of this edition of Namaste Web3. We stand, ladies and gentlemen, at the cusp of a financial revolution where emerging technologies and innovative investment strategies are reshaping the landscape of wealth creation. Today, we'll explore these cutting-edge opportunities and discuss how they can be harnessed further to build prosperous financial futures. Well, we also have created a Web3 community for all of you, so if you want to be a part of this community, please feel free to scan the QR code that is appearing right now on the screen to join this family. And well, to kick off our event and set the tone for the evening, please join me in welcoming on stage Neha Botra, Assistant Editor, Forbes India, for our welcome address. A round of applause for her, please.
Good evening, Mumbai. Welcome to the final edition of our Namaste Web3 initiative. This educational journey, brought to you by Coindcx and Forbes India, has taken us across various cities and states, exploring technology, innovation, and Web3. We have engaged in insightful conversations with regulators, policymakers, industry leaders, corporates, and creators, gaining valuable insights along the way. Today's theme is Unlock Next-Gen Investment Opportunities. We will delve into innovative and transformative investment opportunities and the potential of cutting-edge investment strategies, technologies, and markets that are redefining wealth creation for individuals and institutions. As a nation, we are strong in equity, but we have also seen rapid growth in alternative investments like venture capital, private debt, hedge funds, commodities, derivatives, virtual digital assets, and even art. Your portfolio should focus on creating wealth and lasting value. We are here to explore the availability of capital and expertise needed to deploy it in exciting new asset classes for wealth creation, not only in top cities, but also in Tier 2 and Tier 3 cities. We have an excellent lineup of panelists to experts to delve into these topics and eagerly anticipate an engaging dialogue with each of you. Thank you for joining us this evening in Mumbai. We appreciate your presence and look forward to a great event. Thank you.
Thank you so much, Neha, for that insightful introduction. Well, ladies and gentlemen, while we move ahead, I'd like to take a moment to introduce all of you Namaste Web3. Now, this initiative, launched by Coindcx and Forbes India just over a year ago, is more than just an event series. It's a movement to educate and empower India in the realm of Web3 technologies. Let's take a look at the Namaste Web3 journey.
After exploring India's remarkable strides in the Web3 and blockchain revolution, Namaste Web3 enters the final leg of its journey.
As the world of Web3 is constantly evolving, it can be difficult to keep up with the latest developments. Our goal is to bridge this gap and provide valuable insights and information to the Indian community.
India's presidency of the G20 comes at a very opportune time, particularly since the pandemic. The image of India has dramatically changed around the world.
where individuals will have control. A developer base of approximately 2.8, just under 3 million 2 years ago. It is also projected to have the most developers by 2023.
From Bangalore to Indore and on the investment frontier, from Kolkata to Surat, our journey has reached its pinnacle in Mumbai.
It was important for us to take this movement to every corner of the country because that's where the magic happens.
What binds all of us into one is the common challenges that we have in front of us.
With over 100 influential speakers, more than 5,000 registrations and 2,500 participants on the ground, Namaste Web3 engaged a large audience through online channels.
The industry's response to this framework is very, very positive. In fact, people have kind of started lining up in offering solutions, in offering partnership, in offering skills. Skilling is again an area where we seek partnership.
We are accessible when it comes to ideas, innovation. Let us know what better interventions we can make to India become the most sought after place when it comes to IT.
Talent shouldn't have that gender badge or the gender divide at all when it comes to whether it's blockchain or whether it comes to Web2, whether it comes to AI now.
In our final leg, we will unlock next-gen investment opportunities and explore the innovative and transformative financial opportunities emerging in today's dynamic landscape.
With all the events that we've been doing and all the cities that we've been going to, what we're doing is getting all stakeholders under one roof.
Even as the Namaste Web3 journey concludes in Mumbai, we remain a community-driven force, fostering innovation, exploring multi-asset investment options, and transforming financial opportunities to make India a superpower. Forbes India and Coindcx present Namaste Web3, making India Web3 ready.
A round of applause, please. And well, to share more about Coindcx vision of launching Namaste Web3 and how has the journey been so far, may I please invite on stage Sumit Gupta, co-founder and CEO of Coindcx.
Namaste everyone. Today I am very, very delighted to welcome you all to the Namaste Web3 here in Mumbai. Honestly, to me, Namaste Web3 is not an event. It's a movement. And with this exact thought, we conceptualized Namaste Web3. And today I'm very proud to share that it actually turned out to be a movement. We started this journey in early 2023, almost 1.5 years back. And the objective was to educate and demystify the complex world of Web3. You might have seen a lot of technical words, but the objective of doing these events is so that people can understand in the most basic manner possible. Since then, in the last 1.5 years, this journey has probably become the largest in-person emerging tech educational initiative in the country today. We took Namaste Web3 across India to every corner of the country, visiting different cities, both larger metros as well as the smaller ones. Through this 10-city roadshow, we have reached 3,000 participants on the ground. In fact, we have also reached a much larger audience of more than 1 million through live streaming and digital platforms. During the journey, what has encouraged us the most was the phenomenal response and the enthusiasm that we have witnessed from all of you here. While metro cities have showed great exposure to the technology, it is those smaller cities where we have seen people so enthusiastic about being a part of this technology. And that was quite phenomenal to see on the ground. To me personally, the part that was very, very exciting is how the team has structured it. The most exciting part was to capture the unique flavor of each city that we went to. For instance, in Bangalore, Hyderabad, Pune, which are the tech hubs of the country, we have covered topics that excites developers and builders and founders who are building this ecosystem from a technological perspective. When we went to Jaipur, we focused on how Web3 and NFTs can empower artists on the ground. And in Mumbai today, which is the financial hub, and earlier stops like Surat and Ahmedabad, we discussed how new age investment opportunities are being considered in one's portfolio. In this journey, it was encouraging to see people from different backgrounds, including technology, policy folks, as you have seen in the video, people from finance, and Web3 enthusiasts who are confidently building the future of the internet from ground up right here in India. I'd like to thank everyone who has contributed to this movement and participated in this journey. Over hundreds of entrepreneurs, professionals, and senior government officials, as you have seen in the video here, who have joined us as speakers and helped spread the knowledge about Web3 and educate people about this emerging technology. I'd like to have some special thanks here. A special thanks to Manisha for being with us at every Namaste Web3 event. I'd also like to extend my gratitude to the Forbes team who has partnered with us in this initiative right from the very start. To our incredible team who has passionately drove this initiative. Your hard work and dedication was highly, highly valuable, and you are the success, you are the reason for the success of this initiative. Today, while we are closing the first phase of this movement with Mumbai, to me the journey has just begun. We will continue with our commitment to educate and spread awareness through the Namaste Web3 movement, because we believe India can actually take the center stage in Web3. Your presence here, all of you coming here, means a lot to me. And it just reaffirms to me that we are headed in the right direction. And we will continue to march forward in the direction until India becomes a true leader in the Web3 globally. And until our government welcomes these industries and together says, Namaste Web3. Thank you so much. Thank you for coming here today. Really appreciate it.
Thank you so much, Sumit, for that lovely address. Well, moving on to our next segment, ladies and gentlemen, we have a fireside chat on the future of investing. The investment world is undergoing a seismic shift with new technologies and asset classes emerging at an unprecedented pace. This fireside chat will explore how traditional investment strategies are evolving and what the future holds for investors in the age of digital transformation. And well, to moderate this session, I would request Neha to please join us back on stage. And please also join me in welcoming Rashesh Shah, Chairman, Edelweiss Group. A huge round of applause for both of them. Over to you.
Hello, everybody.
Hi, everyone. Namaste. Rashesh, thank you so much for joining us today. I appreciate your time.
Absolutely. Great to be here and understanding the concept about the future of investing and, with crypto and blockchain and everything. So I'm also very excited to be here. I've also started understanding a little bit more about all these new things which are there. So thank you. Thank you for having me here.
Well, what better way to understand the future of investing than to understand how it has evolved over the years, Rashesh? So let me start by asking you, we live in exciting times. India is the fastest growing economy in the world. And equity has attracted a lot of interest from retail investors as well. Tell me a bit about how you see the investment landscape change in India and how has it evolved?
So I think one of the interesting concepts we have is, India has always been capital scarce, or at least we have felt we've been capital scarce. But I think somewhere around 2020, 2021, if you do the math and make your own hypothesis, we think India is now capital surplus. We have more capital than we can invest. And the other analogy I give is it happened in food grains. You know, in the early days after our independence, India was always short of food until the Green Revolution happened. And somewhere around 85 onwards, we started becoming self-sufficient in food and we became food surplus after that. The same thing happened with capital. I think somewhere in 80s, we started feeling our growth rate was higher than the capital that was available. And then we had, you know, the entire balance of payment crisis and we changed the economy with the liberalization and all. I think after 25, 30 years of that, we are now capital surplus. I think Indians save quite a bit. So in a way, at this point to think about the future of investing is the right time because until now we were only saving money. I think now, last few years we have started investing money. And I think that journey from saving to investing is the crossroad at which India is now because we have a lot of capital. I mean, you must be hearing about the government also allowing people to invest abroad through Gift City and LRS and all people are investing. But India has more capital than we can absorb with our current growth rate. We have to increase the growth rate to absorb more capital. And it's the same reason until about 5 years ago, we were very FII dependent for capital. Now we are independent of FII. We become Atmanirbhar on capital now.
Absolutely. This is very telling in the IPO pipeline, if you look at it, the way companies want to raise funds and also the appetite of investors for IPO. I think that has seen a significant uptake despite not very good returns in many cases. But do tell me, how do you look at equities as an asset class now? What should investors look for when they are investing in equities? What has changed for them over the years?
Actually, in a way, I think equities, I don't think anything has changed. I think they will be volatile, there'll be a lot of drama, there'll be a lot of excitement. But I still remember I started my career in 1989, which for quite a few was a long time ago. But can anybody in the audience guess what the index was, the BSE Sensex? There was no Nifty at that time. But in 89, anybody has a guess what the index was in 89? It was close to 700, and that has become now almost, almost 78, 79,000. So over about 35 years, it's more than 100x kind of a growth. And if you do the IRR calculation on that, it comes to about 13%. I mean, depending on, where you start and end. But it's about 13 to 14% is the index, is the return on equity investing. In index. I'm sure quite a few smart investors are stock pickers and maybe all of you can do more than that, but simple index has given about 13 to 14%. And that is what I think equities have done, and that is what I think equities will do in the future. And very simple, it is generally equal to what is the growth rate of the corporate earnings over a long period of time. And I think India corporate earnings will also grow at 13, 14%. So you'll have all the individual stock excitement and drama, and there'll be stocks which will give you 100% in a year also. But on the whole, the market as a whole, equity investing as an asset class is a good steady 13 to 14% return across a longer cycle. It's not over a year or 2 years, but over a longer cycle, that is what investors should expect.
So that's also your outlook for equities, where you're saying that it would be one of the main drivers for returns for investors over the decades. But what about alternative investments? When you look at alternative investments, real estate is one of the asset classes which has been popular with investors for a very long time, even before equities. When you look at that space now, what are your observations, the top trends that you are noticing, and how does that stack up when compared to equity?
So I think alternatives is an interesting one because all over the world, over the last, I think, about 15, 20 years, especially after 2008, is when alternatives have started becoming a big word. And I think as recently somebody said, alternatives is not an alternative anymore. It's also becoming mainstream. But a large part of alternative investing is about trading off liquidity for a higher return. Basically, that is what alternatives have evolved into, because the markets have become very liquid, but the markets, along with that liquidity, have become very competitive. So the returns have been more and more streamlined, and that's why there has been move from active funds to passive funds, because it's hard to create what is called alpha. It's how to create outperformance in a very liquid equity markets. So if here I'm going to get beta, I'm going to get the market return of whatever 13, 14%. But if I want more, I am willing to take higher risk. Now, there are two ways you can take higher risk. One is risk of actual capital loss, where there can be a price loss, or you take liquidity risk. A lot of the alternative strategies have evolved around the world on, somebody saying, I'm happy to trade off some liquidity and, invest in a 3-year AIF or a 5-year fund or an 8-year fund, but I want to make, 15%, 18% kind of return. It can be a private equity fund, it can be a private credit fund, it can be infra fund, like, in an infra fund that owns roads in India can give you 17, 18% return long term, but it's illiquid. It's not like the stock market where I can go and trade. So what has happened to investing in the world is a lot of people said, what is active investing, where I was paying the fund manager 100 basis points as fees, I will move 80% of that to ETFs and passive, where I'll pay maybe 3 to 5 basis points. And the remaining 20, I will try and take it to alternatives where I can afford to be illiquid. And again, in a lot of alternative strategies, you are not taking risk as risk of loss of capital, but you are taking risk of liquidity. And that is a nuance, I think, that has grown in the last 15, 20 years all over the world, where it started with institutional investors, then it came to HNIs and individual investors who are willing to say, you know what, I don't need to keep all my money in a bank deposit which is overnight available to me. So then they move to equity, but equity is also overnight available to me. Now, as Indians have become more confident, as we have ample savings, at least amongst the more upper middle class and the HNIs and all, people are saying I can afford to lock some money away for 3 years, 5 years, and try and get a higher return on that. And that has been the genesis of the growth of alternative investing in India. It's still early days. I think we are still about 5 to 10 years behind the world, especially the US in alternatives. I just came back from US a couple of weeks ago, and the US is truly way ahead how they've evolved this entire asset class. But I think the similar things are happening in India. So I'm very optimistic, very positive. We had PE funds out there, then we had private credit fund, we have infra funds, we have AIFs, InvITs, REITs, all this fall under the alternative category. And I do believe that more and more investors will invest in alternatives in the coming years. In fact, in alternatives, there is one very interesting trend that has been there. If you see the US, a lot of alternatives started with institutional investors. Insurance companies and pension funds were the investors in the alternative funds. And over the last 8-10 years, it has gone down to HNIs in the US. So when I was there, the HNI investing in alternatives is booming out there. In India, alternatives started with HNIs investing in that. And slowly in the last couple of years, we are seeing that insurance companies and pension funds and all are saying, you know what, I can invest maybe 3%, 4% of my corpus into alternatives and make that higher return. So in the US, it's going from institutions to individuals. In India, we are moving from individuals to institutions in alternative investing.
Against this backdrop, what do you think would be the best contemporary asset classes that investors should consider?
In alternatives?
Within the alternative space.
So again, I think alternatives itself is like, it used to be only one small road on the highway. Now that one small road has got multiple roads in that. So if you think about it, I think again, there is a whole end, and even alternatives now, some of them have become liquid. So what we call liquid alternatives now, which is your InvIT and REIT are the more popular one. But again, it's the same thing. The more you get liquidity, the more the returns come down. So on one hand, you have InvITs and REITs, which give you maybe about 8% kind of return. And to going to what are other, open-ended AIFs, which have quarterly liquidity or monthly liquidity, which give you 11, 12% return, all the way to your infra funds and your stress credit funds and private credit funds and private equity funds, which give you anywhere between 15, 16 to a 23-24% return. So I think the higher return ones are private equity, private credit, and infra funds. The medium ones are more AIFs and PMS investing in equity markets. And the other end, the lower end of the return, but more liquid and more predictable, are your InvITs and REITs.
It's interesting that you say this because, we also have the entire debt basket that investors are still very fond of. Look at the fixed deposit, look at debt mutual funds. That part of the investment pie is also something that attracts a lot of low-risk profile investors. What is your outlook for this basket of investments?
I think there is a clear need for yield, and a lot of this is driven by yield. Because if you want yield and safety, the conventional product was bank. Bank savings, bank FDs and all. We have a very small bond market in India, which has always started and stopped and all. And then we have some liquid funds and we had credit funds, but they've been shrinking. So I think this entire need for yield. So again, alternatives is now becoming a big. They are serving a need for higher return. They are serving a need for exposure to more exotic, investment opportunities and strategies, but is also now starting to cater to yield needs also. And a lot of examples you gave. So a lot of people are saying instead of keeping an FD in the bank, I might as well buy an InvIT or a REIT in the listed market and get maybe 100 to 200 basis point higher return. So on the whole, this entire thing, the capital markets is starting to provide complementary products and some competing products to the banking segment also. And I think it's a very healthy development for India because as our economy is growing, we are now $4 trillion economy. And just as an aside, the US was $4 trillion in '89. So we are the same size as an economy what the US was in '89 when I started my career. So I think this 4 will go to 10 trillion by 10 to 35. So we need more innovation, we need more products, but along with that we also need more self-governance, making sure the right product to the right customers, and we can speak about that. But yeah, I think there is the alternatives which started off by catering to just a higher return is now also have created products which also give you yield.
I think one asset class that is so hard to ignore is gold, the yellow metal. For centuries, it's had that bond with investors, households alike. It's been a good hedge against inflation, global uncertainty. We've seen that in demonstration recently during the pandemic as well. Does gold still glitter for you? Is this something that will always be a part of the portfolio? And what percentage of allocation would you advocate for a retail investor?
So again, I think there are two kinds of gold. Gold as a financial investment and gold as a physical investment. India has always been fascinated with gold as a physical investment because historically, as I said, if you had only bank deposits on one side and equity markets on the other side, gold was much easier for especially people who are not very well versed in markets, who have access to markets. Gold has no KYC. You can go and buy gold for 50,000 rupees, 5,000 rupees. Also, you can buy a gold coin, you can buy all that. So gold has been easy to buy, easy to sell, easy to store also for a lot of households in India. So yes, I think gold has come from that convenience also, ease and all. And there were no other products, and it was supposed to be the best hedge for inflation. In fact, even now, gold is one of the best hedges for inflation. But now, I think there are a lot of other products that have come about. In fact, I think you have things like Bitcoin and also are competition to gold nowadays. But now there are more products available for hedging against gold, or hedging against inflation. So gold still has historic fascination, but I think the fascination for gold has come down as other products have come up. And I am still a very big believer of equities. I think equities itself is a good hedge against inflation. So I believe that if you can be comfortable, have faith in equity investing, and if you are investing for a hedge against inflation, then you may not have to invest in gold. But if you don't have access to equity markets, or you are not comfortable with equity markets, and you need something to hedge against inflation, then gold becomes part of your portfolio. But if you ask me, I'll choose equity over gold any day.
So equity markets are exciting. They come with market volatility as well, which investors need to tide over. So tell me, how do mutual funds stack in this entire gamut of products available? When you look at mutual funds, how do you look at the performance given the volatility? And what is your outlook for mutual fund performance?
I personally think the mutual funds has been one of the best things that has happened for Indian investors, because I think large part of the investors don't have the ability or have the bandwidth and the time to invest directly on their own. And the Indian mutual fund industry, especially in the equity space, equities is now what, about almost about 30 lakh crores. But out of the 30 lakh crores, I don't know whether you know the statistic, there is a total mutual fund corpus is about 30 lakh crore. Only about 12 lakh crore is what investors have invested into the mutual funds. 18 lakh crore is the appreciation that has been there. So by investing over the years, over the last many years in the mutual fund industry started, the investment money that has gone in as fresh money is only a third of that. A large part, 18 lakh crore, 40% has gone in, but the large part of that, 18 lakh crore is appreciation. The good news or the alarming news is also almost 7 lakh out of 18 lakhs has happened in the last 18 months. In terms of the appreciation and the MTM profits that have happened. But I think on the whole, most of the good equity mutual funds have given alpha of about 3 to 4% to investors over the years. And this is phenomenal. Very few places in the world, equity investing through mutual fund has given this kind of alpha that has been there. So I think the last 15, 20 years, mutual funds have been the best product available for a lot of Indian investors and savers. So.
They are the best products available, but there are so many options to choose from. It can get a tad confusing for investors. So what would you suggest would be a good way for investors to identify what would be an ideal mutual fund to add in their portfolio?
I would say either be very analytically savvy and analyze it. There's a lot of information available, websites available, or use a good wealth manager. But I think if you don't want to do all that, if you are comfortable, see the best thing about investing is you choose what you want to eat. You can eat plain simple equity returns given by the stock market, which is, as I said, 13-14%. If you are comfortable with that, and I belong to that category, that I think the market gives you enough return over the long term. There is a quote by Warren Buffett which said, in the long run, everybody will get rich if you stick to the basics. So if you want to invest for the long term and also invest with no excitement and very absence of drama, then I think the 13-14% that index gives you is also good enough if you invest it over a longer period of time. In which case, SIP into just index ETF kind of funds are the best one. The cost ratios are low, the fees are low, and they're easy to invest. You don't have to overanalyze the performance of X fund manager versus Y fund manager. All this takes time. So either hire a good advisor or do it on your own or invest in index funds, which give you, I think, a great return, especially after tax. It's actually one of the best returns you can get.
That can be a good guideline for investors who've been confused about which mutual fund to opt for. But now let me ask you, what are the factors that you would consider when you're choosing an asset class that shows the most promise to you? Venture investing, investing in startups is very popular right now, easy way to make money. AIFs, cryptocurrencies, particularly Bitcoin, the way it rose in November 2022, it showcases the strength of it. What do you think some of these varied investment opportunities could mean for investors, and what would you say could be the best one for them to choose?
So I think when it comes to investing, there's another quote that I always use and I always say, and I also try to follow that. And that quote is that your investment should allow you to sleep at night and not keep you awake at night. So your hard-earned money, you're saving it, you're investing it, but you're investing it so that you can sleep at night because your kids' future, your family future, your own future, all that is protected with that savings. So ideally, invest in a way that you feel you can sleep at night. Yeah. What I follow on that is try and invest on things that you understand and know. So I actually don't understand startup investing as much. I think there's a lot of excitement going on, but the economics and dynamics and valuation, I've invested in a couple of funds which have started by friends of mine. Since I knew them, but not the asset class as much, I invested with that. So either invest with good people that you know, who are good fund managers who can do that, in which case you can invest in something that you don't understand as well yourself. But otherwise, I like private equity, I like private credit. I think these two are very good asset classes. They are different because private credit gives you yield, it gives you, some certainty of return because these are more credit structures rather than equity. Private equity is a proxy to equity market in that sense, but there have been very good private equity funds in India. So of the three that you said, which is, very early stage investing, venture, private equity, private debt, which is in the middle, and crypto and others, which is very exotic, very exciting. I wish I knew more about it. I learned a little bit, speaking with Sumit earlier. I wish I can learn more, and it might be, I think, a good investment if you understand and you are comfortable with, the nuances of that asset class.
Rashesh, thank you so much for your time. Very interesting conversation. The biggest takeaway is invest in asset classes that allow you to sleep at night. Okay, that's the biggest takeaway from the conversation. Thank you so much for your time.
Thank you, real enjoy. Thank you very much.
Thank you so much, both of you, for that enlightening and a very, very interesting discussion. Ladies and gentlemen, as we stand on the brink of a new era in finance, it's crucial to understand the opportunities that lie ahead of us. Our next speaker would delve in the future of finance, exploring emerging trends, technologies, and strategies that are set to redefine how we invest and grow wealth. Please join me in welcoming on stage Dheeraj Relly, MD and CEO, HDFC Securities.
Good evening, one and all. After an interesting, engaging session by Rashesh and Neha, I think I can also keep you awake for some time more. Good. As we are talking in today at this event, the Nifty closed at all-time high levels, 24,000. So that's a great news for the equity investors. Yep. So first thing first, I think I'm a perennial India bull. So we all know that we are at the right times in India. So macro environment in India, the GDP growth has been a great story for us. And this will remain plus minus of 7 to 8% real GDP. I think the macro environment and the growth story for India is intact. Last year, we contributed almost 18% to the world's growth. And as per various estimates, projections, India will continue to contribute a fifth of the world growth. 1/5 of the world growth, incremental growth, is going to come from India. And that's where we see huge interest in India, though we are seeing some kind of outflows from FPIs, and last couple of years we've seen lesser FDIs as compared to earlier years. But I can tell you, in all possible board meetings, strategy meetings across the world, India as a market, India as an opportunity is discussed, debated at length. So our growth narrative is absolutely robust, strong, here to stay. We've done a lot of work on the manufacturing side already, Atmanirbhar Bharat and so on. I think you're all familiar with that, so I won't talk much about that. What has changed in India in last decade or so? I think what we have witnessed on the bedrock of digitization, a new class, new generation of investors like Gen Z, millennials, and these kind of investors come with a very different take on the investments. Unlike focusing on yield, safety, long-term horizon, this is a new generation of investors who are having higher risk appetite, high risk expectations also, high return expectations also, and ready to take the risk also. So that's where they have been exploring multiple asset classes. So we've seen, I think, from 3 crore to 16 crore demat accounts in last few years, from 2 crores to 8.5 crore SIPs, from 2 crore to almost 18 crore folios in mutual funds. So we've seen the younger investors are exploring more in the different asset classes. We've seen emergence of alternate asset classes like even cryptocurrencies. At some point in time, there were more than 10 crore investors on various platforms investing into cryptos, though it's a unregulated assets in India, but we've seen so many players taking interest in some of these things. Also, the demographic story is also a bit more favorable to India. If you look at India as a young country, we have an average median age of 28, and I think India got to get rich before we get old. So we have about next 3 decades available with us to make most out of it. And yeah, so there's also one more enabling ecosystem for superlative growth in the investments in various asset classes. I think that is technology and digitization. The JAM Trinity enabled India to invest from any parts of India, and that too with ease. And I think mobile has played a critical role in democratization of equity, democratization of investments, and that's where we see emergence of investors from all possible nook and cranny of India, and it's growing and growing at a rapid pace. Also, we've seen that there is an increasing awareness about equity as an asset class, though we are at low single-digit penetration so far, but still there has been a significant awareness about equity as an asset class. We see that in the form of number of demat accounts and SIPs, and also in the form of number of folios growing at an exponential pace. So something I call it, equitization of savings. I'm sure you would have heard about financialization of savings, investors moving from physical assets to financial assets. Earlier, people were investing in real estate and gold, and that to physical gold and not financial asset. So now they are exploring financial products. In fact, financialization of saving is at cusp of an exponential growth. Within the financialization of savings, I think the equitization of savings have also leapfrogged. And that's what gets reflected in the interest into the equities by millennials, Gen Z, and other investors also. In fact, we come across a lot of senior citizens who are in their late 60s or early 70s. They also ask that how we can take some exposure into the equities, how we can beat the inflation. Are there relatively lesser volatile products that we can explore to participate in the equity as an asset class? So equitization of savings is a big theme, and it started to play out. My take is that it will play out even more at a faster pace. So we have long-term bull markets prospects in place. I think India is 5th largest economy right now, slated to be a 3rd largest economy in next 3 years, and probably continue at that level for some time. From current $4 trillion economy to $7 trillion economy, it will take about 6 years. So as per estimates by Morgan Stanley and many more players, we should be touching $7.3 trillion economy by 2030. So, and recently we have concluded our elections, and we got the incumbent government got the third mandate, though slightly weaker mandate, but they've got the mandate, and we are witnessing the continuity of portfolios at ministers' levels and also continuity in the policies, and something that we will witness during the budget also. So which clearly means that there is enough and more runway available for us to leverage the growth ecosystem, enabling ecosystem set by the 2 terms of previous government, and we see that there is a strong, compelling case for bull run to be intact in India. The environment is absolutely conducive, ecosystem is right, we just need to get our act right and leverage it and make most out of it. I think we could navigate COVID in last 10 years, we could navigate geopolitical tensions, we could navigate even the imported inflation coming from the increase in the crude prices and so on. So in last many decades, we have demonstrated resilience in India. I think this resilience with the enabling and conducive work environment will pose a good runway for us to leverage and grow. We've seen that not only the interests are coming from the main cities, the interests are also coming from all possible cities. Sumit was mentioning about they did events at smaller cities like Rajkot, Jaipur. There are no more smaller cities actually. We are witnessing the participation from very, very remote places. And as I mentioned some time ago, the Jam Trinity, the mobile applications helping us to penetrate faster, better, easier, and it has democratized the investments in India. We are also seeing various new investors participating. One more critical change I have seen in the last 5-6 years more so is that people are willing to learn. They are spending enough and more time on YouTube videos, attending events like this, and trying to learn about various asset classes and various products, including what we have seen that now, so many investors are participating in complex products like futures and options and so on. I have already covered that the technology and innovation. This is an interesting piece. I know it has become cliche to talk about SIP story in India, but I am giving you some little bit more twist to make you understand this, how this can actually compound the growth for investments in India. So far, the throughput value in India is about 21,000 crore. Okay, that's May number. But how it has been growing? It has been growing at a 1.96% month-on-month compounded annual growth rate from 2016. So if you annualize it, it is 25.6% compounded annual growth rate for the SIP amount. And trust me, in 8.6 crore SIPs, the average ticket size in India is just about 2,300 only. So 2,300 is a very small amount. I think many more people can invest this kind of an amount in the market. I know when I started my career in distribution space in 99-2000, I was doing a concept selling of SIP even at that time. It was hard to explain people what SIP is, but today it has become a household name. It has got so much acceptance that the life insurance companies are using it, and even some of the non-financial companies are also using this as a concept to explain. So my take is that if we continue to compound even at the same rate of almost 2%, you can see by January 28, this number will be 50,000 crore per month. And if it continues to compound at the same rate, and it will, by December 30, it will be 1 lakh crore per month. Today, I think we just mentioned that the total equity AUM is around 30 lakh crore, and we are talking about 1 lakh crore, 50,000 crore kind of inflows coming in the form of SIP. And trust me, whenever I go and meet customers at different forums, the single largest question, the overhang they have in their mind is that, is it the right time to invest in the markets? You've explained to us about the markets, you've explained us the India growth story, but abhi ye batao ki is it the right time to invest in the market? I think it boils down to that. The only answer to this question is staggered investing, which means that don't time the market, just in a disciplined fashion, continue to invest in the market. You can do monthly SIP, you can do quarterly SIP, you can do fortnightly SIP. Today options are available. You can do even a daily SIPs also. So if you are too paranoid about the, vagaries of the market, timings in the market, just follow any discipline, whatever suits you. And I have just mentioned a few minutes ago, the average ticket size in India is just about 2,300. That won't make India as rich. So even if you invest 5,000 rupees per month also, you're investing 60,000 rupees per annum, 10 years, 6 lakhs. With the whatever growth rate you take, it will become 12, 14 lakhs. Won't be sufficient after 10 years for paying even margin money for your home. Won't be sufficient even for buying a small car also. Even it's difficult to get even car at this price even now also. So that's where we are. I think this has got the right attentions. It will compound more. It will even more make investing better in India. So apart from the India as an investment opportunities, I think for investors, there is one more option available to participate in the global investments also. One can invest in the companies that are listed abroad and doing business all over the world. Companies like Apple, Nvidia, Meta, Magnificent Seven, and so on. I think there are enough and more platforms that are available in LRS, liquid scheme by Reserve Bank of India. Up to $250,000 per assessee you can invest in abroad. And I think there is a case for upward revision of this limit also. So that way one can, invest and take exposure into the global equities also. There are platforms available which enable global investing as simple as what you can do it in Indian stock market also. There are other routes available. There are mutual funds also who invest into global equities also. There are schemes available. Hybrid schemes are also available where the portion of the corpus goes into the global investments. In this way, whatever product you are consuming in India and where if you want to participate in their growth story, let's say you are buying every other day from Amazon, but you can't, and you're watching a Prime channel also, Prime OTT also, but you can't participate in this if you invest in only in Indian market. So the option for you to invest in some of these stocks and take exposure in these things. I think IPOs is a barometer of activity in the economic activity in any time in any country. We've seen, there's a mad rush for IPOs now in last 1.5 years, and pipeline is even more strong, robust. This is a very good sign for the markets because this helps promoters to monetize. They can get growth capital also, and also exit route for a private equity players also. So this is a great time for everyone, and this is also a good opportunity to participate in the newer businesses, the businesses which are not listed. Like case in point, there are many platform companies who are, leveraging the digitization, and they were not listed. They were in private space. Private equity is very difficult for retail and individual investors to understand. With the IPOs, now you have an access to invest in some of these platform companies, and these platform companies are likely to ride the digitization wave, ride the affluence wave, per capita growth from 3,000 to 5,000 and more affordability. Moving on, I think IPO market I have already covered. So managing volatility, I have given you already one simple solution to that, that is staggered investment. The other things you need to do is that you got to get into a long-term perspective for the investment. Don't watch market every single day. I know I'm not doing justice to the CNN media, but the point I'm trying to make here is very clearly is that you don't need to re-look at your portfolio every single day and keep calculating that you are up few thousand, few lakhs, or down few thousand or few lakhs. You just can sleep well if you have made a right portfolio, and you will see that you will have a seamless ride. Like Just to give you a simple example, last month, just before the elections, you would have, switched off completely from the markets. Whatever volatility we have witnessed in the election times, now after elections are over, few weeks after that, everything is at all-time high level. So if you haven't tracked markets for last 20, 30 days, you don't know this kind of a volatility in the market, and it has not impacted you at all. So the point I'm trying to make is that have a long-term perspective and don't get myopic about your growth in the portfolio every single day, plus minus. We don't do that for alternate asset classes. We don't do that for real estate. You don't get your home valued. You don't go and take your jewelry and get the valuation done on a daily basis. So don't do that for financial assets as well. I mentioned few sectors where there are opportunities. I think the opportunities are widespread almost in all sectors, but we've seen PSU delivering great returns. We've seen financials to started to perform in last month or so. So I believe that there are opportunities in consumer sector, technology, healthcare. There's a value in these sectors, and we cover them in depth. I am mindful of the time, so I think real estate as a one asset class was always in favor in India. I don't think so. This has been an alternate asset class. This has been the prime asset class. Whenever people had money, they had invested either in real estate or gold, whichever form, physical or little bit in the electronic form. This as an asset class have been growing. Last 10, 15 years, we have not seen much momentum in the asset class, but in last couple of years, again, we've seen that there is some traction in this. One route is to buy, commercial property or a residential property, make rental income on that. So that option is available, but you have to compromise on two things. One is liquidity, which Rashesh was talking about, that if you are ready to trade off liquidity, you can invest in some of these asset classes. And also you can't part sell these assets. But there are alternatives available now in the form of REITs and InvITs, where you can participate in these asset classes as financial assets, not just as the real assets also. So good discussion in the last panel for the alternate assets. I think this is just at the cusp of a small growth in India. I think this is up for adoption, much and more adoption. Private equity is one space where people are very much interested, and ticket sizes are also coming down. AIFs are doing well. Through some hybrid route, people are investing into the unlisted space. I can tell you, as a brokerage house, HDFC Securities gets so many queries every single day on unlisted entities like National Stock Exchange and few more. So we keep getting more and more inquiries in this space. People are looking forward for more options here. Even many SMEs have got listed in last 3-4 years. So that way we've seen that emergence of newer asset classes also there. Gold, I think gold has been a safe haven, and 5 to 10% of your portfolio should be allocated to gold. And I would suggest sovereign gold bond, not physical gold. So few simple help points for you. Stay more informed. Do your own research in the market. Do not follow tips. Do not just, invest on hearsay. Please be aware of the right kind of influencers. So don't listen to all possible influencers. Go for SEBI registered influencers and advisors only. It's your hard-earned money. You need to take care of your own money, and you need to read more. You need to learn more about the markets, about the products. Plethora of information is available. Media is doing an amazing job here in terms of informing and taking initiatives like this, and also through the digital platforms. So my suggestion to every single person who's looking forward to participate in capital markets or other asset classes, to be more informed. I think in 2000 FIFA World Cup, there was a theme song called Waka Waka, this time for Africa. I hope some of you will remember that song, Shakira's song. I would say this is the time for India. next decades belongs to India, you can't bet against India. If you have to really make most out of your accumulated wealth, you want to create wealth, then don't bet against India. Invest in India. That's about it from my side. Thank you so much.
Thank you so much, Mr. Relly, for those valuable insights. Well, ladies and gentlemen, moving on. In today's volatile market, diversification is more important than ever. But what does diversification look like in the age of next-gen investments? Well, we'll find that out from our next speaker, and who will also shed light on how investors can use alternative investments to build more resilient portfolios in an increasingly complex financial landscape. And without further ado, please join me in welcoming on stage Lakshmi Iyer, CEO, Investments and Strategy, Kotak Alternate Asset Managers, for a special address. A round of applause for her,
please. Good evening, everyone. I know you are all eager to be in high spirits, and I know this is Friday, so for people who are Bollywood, buffs like me are more than eager to watch the first day last show, which is the release of the movie Kalki, which stars Prabhas. But here I am to discuss an asset class which is an upcoming Prabhas. Prabhas is a listed equity in the Bollywood parlance. Everyone knows, probably a lot of people have watched his movies, or for that matter, Amitabh Bachchan, who's also in the movie, or Deepika Padukone, who are all mega caps in terms of market cap. But here we are to discuss an alternate asset class, which is a Chote Mia compared to the Shehenshah or Bade Mia, which is the listed equities. But here are some interesting points to ponder. Which is the largest market cap company in India? Yeah, you can be louder. And what is the size? That's right. And what is the size of the total AIF or alternates industry in India? So you got the answer. So look at the giant and the Goliath, which is the largest market cap company in India versus the total size of the AIF industry in India. And I think that is clearly an opportunity as far as the alternate space is concerned. We are in 2024, and I have, traversed my investment journey across 2.5 decades. Most part of it was in the asset management industry, of course, in mutual funds, and now into alternates just about a year and a half back. But, back in 2016, 2017 is when the campaign of mutual fund Sahi has started. Can you guess what the size of the mutual fund industry was at that point in time? This was about 6 to 7 years back. Today we know what the size is, roughly a little under 60 lakh crores. At that point in time, the size was less than 20 lakh crore. Maybe it's, I think, 16 or 17 lakh crores. Today, as we speak, the AIF industry, in terms of total commitments raised, is even less than that. The difference is this, basically a lot of awareness, and I think Rasesh and Dheeraj also very well articulated, that all of this put together realize that there has been tons and tons of information being made available. The fact that people have seen wealth growth or, wealth creation happening through listed equities, or for that matter, fixed income as an asset class. But equally interesting is the data to note that if you look at the larger household ownership of asset classes, again, any guesses which will be the top asset holding? Any guesses? Real estate. Real estate tops the list, followed by gold, and followed by fixed deposits or bank deposits. So just imagine the real estate plus your gold and traditional mode of fixed deposits put together is more than 80% of Indian household ownership, which means even though there has been proliferation of, and the awareness creation about mutual funds and the listed equities and fixed income, still they are in low single digits. And that creates, and imagine, usse bhi poorer cousin hai the alternate space. So what exactly is the alternate space? Anything which is not listed, anything which is not Abhimanyu, I call it Abhimanyu. Abhimanyu is, jo Chakravyuh mein phas gaya tha in Mahabharat, for those who are aware. And of course, Abhimanyu died, but here alternates is a relatively lesser explored, I would say an underdog, not really popularized, unlisted, therefore illiquid asset class. But it is a silent hero or a heroine, as I would call it, which is rising up the ranks steadily. So if the size of the mutual fund industry is little under 60 lakh crores, the size of the AIF industry, which predominantly houses all of these asset classes, is probably 1/10 of that size today. But the good news is that slowly and steadily, consistently, we are seeing a rising trend of investors, more and more investors wanting to own this asset class. Have you heard this, Airtel ad which says that har ek friend zaruri hota hai? And likewise, our narrative, as investment managers, we always say, har ek asset class zaruri hota hai. So, for example, if you look at the pecking order of, again, I take listed equities because that is what is there in everyone's mind. In 2024 calendar year itself, Nifty or Sensex has touched all-time highs almost, 22 times, I've lost the count now, 21 or 22 times. So the largest market cap company is in oil and gas. The second largest is, I think, IT. The third largest market cap would be a bank, followed by a telecom company, and then followed by a bank again. So if you look at, and the largest market cap, as you rightly alluded to, is close to about $250–260 billion. The next one would be 160, 170, and likewise. Now imagine if you want to grow your wealth and multiply it, say 5 times, 10 times, 20 times, and Rasesh did allude to 1989, BSE Sensex being at 700, 800, and today has grown 100 times. Imagine if I tell you that next 10 years, if you are investing, what is the return potential that the largest market cap company can give you, or what can a company with a market cap of say 10 lakh crore, forget 20 lakh crore, or for that matter a 1 lakh crore market cap company give you? Well, your answer would be 12% compounded, 13% compounded, 15% compounded. But if you want to go beyond that and try to seek market cap, companies which probably don't have a market cap at all, not really delivered, but something which can deliver 30x, 40x, 50x, where do you go? Well, one answer is, somebody told me yesterday when I was doing a similar kind of audience, somebody said micro caps. I said, okay, but what about, the unlisted space? And I think that is where we are seeing. So, for example, if you see unicorns in India, we're almost touching 100. We'll be more than 100 in terms of unicorns. If you look at the startup ecosystem, you are seeing every time a new ecosystem or startup entity is coming. NASSCOM has recently said that India ranks 6th largest as far as deep tech startups are concerned. So I think all of this is pointing towards the fact that the proliferation of alternates in India has already begun. In the last 5 years itself, you have seen a compounded growth of in excess of 40%. And this includes asset classes like private equity. And this private equity could be, Dheeraj mentioned, spoke about, say, NSE. It could be probably a growth stage, a late stage growth kind of an entity. But there could be, as I said, mini and micro NSEs also, for example, across different sectors. These are early stage entities. There could be mid stage. There is private debt. So that's the private equity ecosystem. You have the private debt ecosystem. Today, fixed income in India sovereign yields you close to about 7%. Dhakka marke, if you buy a quasi-sovereign, it yields you 0.5% more, which is 7.5%. Or dhakka maro, you go down the rating curve, a AA plus entity will give you maybe 8%. I'll push it further, and I will change the alphabet from A to B. So you have a triple B entity which gives you maybe 10%, 11%, 12%. But there is a world beyond this which are profit, EBITDA generating positive companies, which probably are not available in this ecosystem of the larger investors. And that is where the private debt comes in, which has the potential to deliver at least 8 to 10% higher than what traditional investments are offering you today. And that's where the private debt alternates clearly come in. So I think this is a very, very happy ecosystem which has just started to emerge. And in fact, very recently there was a study which showed that almost 10 trillion rupees worth of commitments have been raised across these entities, whether it's venture capital, whether it is private equity, whether it is private debt. So I think all of these, and I also want to emphasize about REITs and InvITs, and we did hear both Rasesh and Dheeraj talk about it. But I think REITs and InvITs are a wonderful mode of ownership of real estate and the infrastructure story in India. Now, how many funds would be available? Probably far too few, but there could be very, bespoke structures which are available in the alternate space, which allows you to participate in all this. So I think, needless to say that there is going to be a huge growth. Pitfalls are, of course, there. With every growth comes a pitfall. There is a buyer's beware. So as I say that this is an illiquid asset class. So fill it, shut it, and forget it. But as you know, you can't really look at the value of it on a daily basis. It is not available for sale at beck and call. Ki aaj cheek mara to kal exit kar liye. That's not going to happen. So therefore, can you have it as the core of your portfolio yet? Probably the answer is no. Can you have it as a complementing strategy to your existing portfolio and show some sense of diversification? Well, the answer is yes. Is it for the slightly more evolved investor? Again, the answer is yes. And that is the reason, if you look at mutual funds, which is now, as I said, almost 60 lakh crore, sorry, the minimum ticket size is 5,000 rupees. And if you do systematic investments, you can remove 10, it goes as low as 500 rupees. Whereas in the AIF world or the alternate investment world, the minimum ticket size is 1 CR. So that is kept with, or 10 million rupees, it's kept with a reason, because if somebody is allocating a CR or 1 CR to an asset class which is illiquid, and when I say illiquid, these are, strategies which range from 5 years to 6 years to maybe upwards of 10 years, because the value unlocking takes that long. But the biggest advantage is if you want to own defense stocks in India, listed, okay? The whole gamut of defense stocks probably would not be more than 20-25 in number, of which if you try to create an index, which is again in the listed space, it will not be more than 15-16 in number. But if you actually go down the curve, and likewise in healthcare, if you look at pharma and healthcare in the Nifty, it is just about 3.5-4% of the index, and that too after this rally in the last 3 quarters. But if you look at the unlisted world of healthcare, life sciences, etc., the investee company portfolio of one single manager would be at least 20 companies. So I think that is where there is an ambit and there is a huge plethora of opportunities. But buyers beware, as I said, there is illiquidity. You cannot expect 1% return every day. I think that's what the narrative is going on right now. Ever since this government came into power, somebody told me my portfolio is appreciating 1% every day. Come on, 1% every day? That's a joke. But anyway, I don't want to comment on that because my wealth is also growing. Despite me owning ESOPs of my own parent company, that's also growing. But the point I'm trying to say is it's very important for you to have sparing proportions of this asset class. And I wrote something down as I was hearing Dheeraj speak, and I want to read this out for you, and that's my final 2 bits on the AIF world of investments. In the investment Maidan, equities is the Bade Miya, and I mentioned this to you, alternates is the Chote Miya, but the aspiring India crew never had any borders drew. AIF category is indeed a fighter, apna time aayega, faith makes its future brighter. And again, this is, a little bit of limerick plus the Bollywood. And there will be a time when, you are having an animated, and this is an animated conversation. So just for the fun, it's Friday night. But there are two investors talking, and one says, "Mere paas," and you have seen the movie Diwar. Kalki to none of us would have seen unless you had a day off today. But the animated conversation between two investors says that "Mere paas equity hai," that is listed equity, fixed income hai, bank balance hai. Tumhare paas kya hai? And the second animated investor says, "Mere paas alternates hai." So finally, there is no ifs about AIFs. It is a momentum in the reckoning. Go for it. Thank you.
Thank you so much, Lakshmi, for shedding light on alternative investments. Ladies and gentlemen, a quick reminder to all of you to be a part of this community. You can scan the QR code, which is appearing on the screen right now, and join us. Well, and now we move ahead to a panel discussion that brings together diverse perspectives on a critical topic. How can we harness the power of next-gen investments to create lasting wealth? From startup investing and blockchain-based assets to AI-driven portfolio management and impact investing, our panelists will explore various avenues and strategies for building wealth in this new era. And to moderate this session, I would request Neha Bothra to please join us back on stage. I would like to also invite the panelists for this discussion. Let's please welcome them all with a huge round of applause. Apurv Sharma, co-founder, Exclutor. Manoj Kumar Agarwal, co-founder and managing partner, C Fund. Radesh Kanumuri, Managing Partner, Suvan Ventures. Harsh Dalmia, Founder, Khazana App and MD and CEO, Watermark Digital. And Sandeepan Roy, CIO, Motilal Oswal Private Wealth. A round of applause for all our speakers. Over to you, Neha.
Hi, everyone. Thank you for being such a good audience, very attentive. And we do hope that this power-packed panel here will have lots of insights to share with all of you, which will be actionable insights, which you can actually act upon. So let me first start by just giving a small backdrop about what we'll be talking about, which is trying to understand in this day and age when there's so much disruption happening, innovation is the buzzword. I want to ask each panelist here, how do you identify a good opportunity? There's so much happening, there's so much clutter. So A, how do you identify it? And B, what do you say would be a good potential investment when you identify these white spaces and these ideas? Starting with you, please.
Thank you so much. So I think there's a multi-pronged answer to this question. So identifying a good opportunity first require an access to these opportunities. Right, specifically when we talk about startups, right, the access in itself is very difficult because, these are not listed anywhere. So first is access. And then if you want to identify if it's a good opportunity or not, the industry expertise is required, right? Because we are talking about, we are talking about a future opportunity down the line 5, 7 or 10 years, right? So I think these are the two important factors. If you are identifying an opportunity yourself, or if you want to, take help of experts, you can, either take an investment approach where you are investing in venture capital funds. If you have a sector-focused approach, you can invest in a thesis-driven VC fund. So, yeah.
Sure. So, Manoj, what do you look for in potential investments against a backdrop of constant innovation, disruption?
So I assume you are asking this question in the context of startup investing, or rather innovation investing. According to me, the most complex element of this whole startup or technology investing or investing in innovative innovations is actually identifying the opportunities, finding these opportunities. Probably the bulk of our effort or time goes into this, and this involves a lot of work across, and this especially in the early stage. Now, as they mature, it becomes easier because you are aware what's happening. Now, we are an early stage investor, so we engage with the ecosystem very deeply, which is across universities, colleges, IITs, Indian Institute of Sciences, incubators, accelerators, various government programs, and we meet, and there are founders which are not in these areas also. They work in silos sometimes. I'll just give you an example. We have a bunch of interns who actually go and search on LinkedIn of founders who claim to be working in stealth mode. So we actually look for founders working in stealth mode, and then we reach out to them, and sometimes they don't respond. So besides opportunities coming to us, there's a huge effort to reach out to them. And then once you have identified, then there is certainly the next level of effort, which is, in our core area. For example, each one of us in the investing community have our focus areas. So we look at opportunities in our focus areas, technologies which we understand. Then we are certainly evaluate internally and use external experts. What level of innovation is the company doing? And the founder is the very key element of that.
Sure. Hold your thoughts, Manoj. I'll come back to you. But let me bring Radhesh into the conversation. We are talking about innovation. We are talking about potential investments. What are the two big points that stand out to you when you examine these two?
Yeah, so just to give an example, context. So we are a fund which invests in B2B SaaS companies early in their life cycle with a base in India, but look to sell to the global market. So that's basically the baseline. And so fundamentally what we look out is that on a very qualifying criteria is that they need to have at least their MVP in place, and they are looking to sell to the global markets. If their focus is in the Indian market, that really doesn't excite us. So these are the basically two qualifying criteria. In addition to that, obviously we have other criteria to evaluate, for example, what's the total addressable market,
sure,
and how the differentiation is, how the team is, background, all that stuff.
Mm-hmm. Harsh, would you like to add to that?
I think if you're talking about finding groundbreaking innovations, I think it's about talking about looking in the future. It's like in early 1900s, if someone invested in Ford Auto Company, when horses were on the road, that's forward thinking. Similarly, if someone invested in Amazon in 2001, he would have made a lot of money, but he had to imagine the delivery systems that Amazon has created. And for me, I feel that Bitcoin is the answer to groundbreaking innovation for what it's done. And I think that cannot be ignored. It takes courage and consistency to think out of the box and go against the herd and buy something. But we cannot ignore that Bitcoin has given 150% annualized return since it's bought. So if you bought Bitcoin in 2010 for 1,000 rupees, you'd be sitting with, guess how much, guys? 50 crores. If you invested 1,000 rupees when Bitcoin was introduced, you'll be sitting with 50 crores. I mean, you cannot ignore that, but it takes courage to invest in it. So it needs a lot of courage and conviction.
Sounds interesting. Sandeepan, what do you have to say about this?
No, that's mind-boggling numbers. I'll just draw from the Web3. What is Web3? Web3 is all about decentralization. It's about putting power back in the hands of the users, right? Similarly, in the investment world, the way I see it, clearly there is going to be a massive trend towards disintermediation and decentralization. So actually opportunities are everywhere. If I can address the information asymmetry that is there, huge opportunity. If I can address the ease of access, the access arbitrage that is there, huge opportunity. If I can address the entire cost bit of it, huge opportunity. If I can address the ease of usage part of it, gamification, with obviously India, the median age, as Neeraj says, 28 years, I think 15% or 25% of the population is below 15 years. So there, gamification, moving to the mobile platform, huge opportunity. So there's an opportunity in the platform. There's an opportunity, democratization of all asset classes. Why would only rich people invest? Why can't I have an access to the same commercial property that is a billionaire's play today? Can I democratize that investment itself, right? So So that also becomes another part of it. So wherever, you see these opportunities and the young people are mostly, restless and impatient, but they want everything. I guess there you will find opportunities in all aspects of be it the platform, be it the process, be it the product.
Just to sharpen the focus, Apurva, let me come to you. Public markets have been performing quite well. In fact, very encouraging returns investors have seen in the recent past. When you compare this with the alternative investment space, how do you think alpha stacks up?
So yeah, public markets are performing exceptionally well. And that also, kind of reinforce the overall investment landscape in India, right? And that positively impacts the alternative space as well. As an investment instrument, alternatives fundamentally try to perform better than the public markets because the illiquidity and the risk that is involved into it, right? If we talk about venture capital, as I said, we are still a very new industry in India, right? So maybe in US it's like 4 decades old. We are still in the first cycle. However, the innovation is not stopping, right? So VCs back innovative startups, VC back new businesses, and the innovation is growing. So the industry itself is growing, and the opportunity to get a higher over the public markets is of course there.
So as you alluded, I'll come to you in just a bit. So as you alluded, the private equity space, the venture capital space, it's doing very well. Lots of investments coming into this area. But if you take a closer look, a lot of the capital is coming from foreign markets. Foreign investors are really driving this entire rush of money that we are seeing in this space. How do you think, Manoj, the domestic capital sources will respond over time? Will they catch up? What is your view on this?
That's changing actually. I don't know if you are aware, just a couple of days back, SEBI has released data of alternative investments over the years. And the committed capital is 10 lakh crore. Already invested capital is more than 4 lakh crore. Out of that, almost 2 lakh plus is in private markets, then there's real estate and all. So this number is not small. We are talking about 4 lakh crore invested in alternatives, which is probably what about, 50 billion types, yeah? So the number, the price, and out of this, the domestic capital is almost 60%. They've also released data on where the capital has come from. So 60% of capital invested in alternatives in the country, these are funds based in the country, is domestic capital, which is a big jump. I assume when they started, the number would have been much lower. Still, we get a lot of capital from overseas, but the equation is changing, and we see that growing. There's certainly the industry is working with the government to enable pension funds and all kind of other institutional funds to allow them to invest in alternatives, and that will probably open up the markets, the HNI community, the family offices, the corporates. I think that number is growing, and we see that, really something like the mutual fund industry happening very soon.
Does this hold true for private equity and venture capital specifically in the alternative space?
Yes, actually. I am saying this is growing. Even today, if you take the total investment in the private equity and venture capital, because of the late stage investing, which still comes from overseas, because late stage investing, we still don't have the numbers to write a $600 million check in Zepto. But with that, the number is still high from overseas, but the percentage of domestic capital has drastically grown. I don't have the number of the cumulative capital of overseas and domestic, but it is very clear that the domestic capital number has been growing, and this does not include direct investing, right? This I'm only talking about alternate investing. I mean, there are very famous investors from the capital markets who have started investing directly in the private markets. Some very famous names. I don't want to take those names. All of you know those names. They are investing in the private markets. We as investors get those data because when companies approach us, we know who is the investor and all. And these are numbers like in small companies valued at 50, 100 crores, they've invested 10 crore, 20 crore and things like that. So the numbers, if we count these numbers much bigger.
Sure. Radesh, you were saying something. Would you like to add to this?
I was just adding to his point. There was a research done by Standard & Poor and Cambridge Associates in 2020. And they actually did a correlation of the return of investment from all the private VC investments and the return on investment from S&P. And they found that the return on investment from VC was VC and private equity actually beat the returns on the equity by like over 5-year horizon, 10-year horizon, 15-year horizon. So I just wanted to add that point.
That's an interesting point. Harsh, coming to you, we are talking about involving investment strategies. We are looking at the alternative investment space. What would you say would be a good strategy for building a portfolio with cryptocurrency? What would the challenges be? Do highlight that as well.
Okay, the first challenge is that people face in India to invest in cryptocurrencies. And by the show of hands, can we know how many people in the crowd have invested in Bitcoin? Right, so we have a very friendly crowd here, but many more have not invested. I think the main reason is people feel that investing in Bitcoin is still illegal in India. Believe it or not, people think it's still illegal in India. Number two problem is that the taxation is very high. You cannot offset your losses. And they don't know how to buy Bitcoin, how to buy cryptocurrency. Obviously, platforms like Coindcx, which is FIU registered, is making it easy that you can open a normal account and invest in cryptocurrencies the way you're investing in a normal equity market. And I feel there's a strategy I would suggest to everybody, just dip your feet in this asset class. Start with small amount, start an SIP in Bitcoin, or you can also study altcoins, the different projects which are unicorns of tomorrow. One should study those companies and start investing in it. Unfortunately, the infrastructure is not placed out here. I wish institutions like Motilal Oswal, Edelweiss, they go out to their clients and educate them more. And media also talks more positively about this asset class to make the people aware about it. If that happens, I think there's a lot of money on the sidelines to come into this alternative asset.
Sure. So Sandeepan, let me come to you. What do you think are some new emerging investment ideas that new India should think about? You know, when the youngster who has a high risk appetite is willing to experiment, is looking at a product range that he can choose, what would you say he needs to keep in mind?
Yeah, I think most investment decisions at the end are driven by greed. You know, so when Bitcoins were soaring high, all the WhatsApp groups I was part of were only talking about Bitcoins, right? When mutual funds or SIP movement that we see, a large part of it has also got to do with how the markets have been performing, right? So in the end, you know, what as youngsters need to keep in mind is obviously they are restless and there is obviously that hunger to get rich quick types, you know. But in the end, what prevails in the markets, in investments worlds, across asset classes, any asset class that you take, Bitcoin included from 2010 till today, with all the ups and downs, right? So you have to be patient. So in the end, you have to stick to your first principles of investments and be patient. Making money takes time. Obviously, concentration of risk can sometimes create wealth. It does create wealth, but that is only about the winners that we hear all the time. You know, there are 99 other people who would have lost money in the same kind of stuff that you would have invested in. So, yeah, you know, sticking to the first principles really helps in such cases. Sure. But in terms of the investment avenues that we spoke about, I think one very interesting area that is coming out is, I think, fractional ownership in everything. So when I said, you know, it's not just real estate, you know, the other day, one of my friends, he's running an energy company, an EV company, and he spoke about how he's trying to give fractional ownership to EV buses. You know, so there, anywhere where you see an asset which is otherwise inaccessible to a group of people, I think the fractional ownership concept is coming out, and avenues are getting created to get in there. In the regulators are helping. You know, SM REIT, the small and medium REIT, I think is a fantastic concept in itself, right? Where the retail investors can do micro kind of investments in properties, etc. So wherever we get such opportunities, great. In terms of even AIF investments, we see a lot of aggregation coming in. I think distribution itself is moving more towards aggregation and solutioning. So you'll find a lot of fund of funds coming in who are actually giving access to a single check writer to multiple funds or multiple fund managers who otherwise you wouldn't have had access to, or you would have access only at a very, very high ticket size. So there the cost arbitrage and the access arbitrage comes into play, right? So similarly, you will find, everywhere some bit of diversification without really going into very, very high tickets is coming into play. Fractional ownership is coming into play, and people are willing to experiment. Everyone is willing to experiment. I think the risk-taking ability of the nation has gone up, and hence the activities in even the venture capital space, private credit space, that has all moved up. People are wanting to experiment with new asset classes all the time now. Wherever they find opportunities and returns, given a good reasoning behind it, people are willing to back it up. Capital is not a problem.
So everyone is willing to experiment. That's the word coming from him. Radesh, another interesting theme is impact investing. I keep hearing a lot about impact investment, be it in agriculture, healthcare. These are some areas that are very exciting for youngsters who are very conscientious and very impact-driven when it comes to social outcomes. So clearly there is some interest there, but what's driving the growth and what are the challenges when it comes to returns? Because at the end of the day, that is also something that matters.
Yeah, so as a thesis point of view, we invest in technology, which is making a difference. And just for the knowledge of everybody, impact investments are basically those which are for profit, but with having a sense of doing something better for the society. And you're right, there has been the issue on the returns aspect. But I also see that I think there's going to be quite a bit of emerging area I think it has to be having some patience to come in. And I think it's very interesting to see how this space will evolve over the coming months or years, I would say.
So we have just 5 minutes and we need to wrap the conversation. So very quickly, in a minute or less, tell me in the next 5-10 years, what would be the exciting trend we would see in the alternative investment space that you particularly are confident about?
So of course, I'm confident about the venture capital space, right? So the number of angels are increasing, and venture capital, we see them as like mutual fund for startups. So mutual fund sahi hai, to VC bhi sahi hai. Right, so.
Manoj?
I think within venture capital, risk capital space, deep tech investing is one thing which I see will evolve over the next few years. And, some amazing stuff is being built out of India especially, and that I see as a good opportunity, both, especially in the young community, because they understand this, they are well read, they are well educated. So that is one area which I think will evolve into a very large space.
Radesh?
Yeah, it's for me, it's technology companies and especially those companies which are leveraging AI and solving some big, large global problems.
Harish?
Well, I think the Bitcoin price will be above $250,000 in the next 3 years. So it's the best investment. And there'll be a lot of tokenization of your assets that will happen, which BlackRock is talking about. So digitalization is the way to go. So we really cannot ignore Bitcoin.
Sandeepan?
I think it's capital markets. We are already at about 4 crore demat accounts and adding at a pace where I think getting to 14 crores or 140 million kind of accounts is not a distant dream. It can happen in the next 1 year itself. So capital markets and all the ancillary services related to capital markets, I think that's where you will see a lot of excitement in the next 5 years.
In the alternative space?
So alternatives, again, is something that will feed into capital markets, right? Wherever there's a requirement of capital, I think that's where alternatives come into play. I think REITs, InvITs, SM REITs, why can't I even do a REIT on hospitals, on hotels? So anything where there is a cash flow, there is an yield, can that be structured and created into a fractional ownership is what will gain prominence going forward. And that, I think, will be a big trend.
Sandeepan, Harish, Radesh, Manoj, Apurva, thank you so much for your time. It was a very insightful conversation. Thank you very much.
Thank you.
Gentlemen and Neha, for that very engaging and informative discussion. Ladies and gentlemen, as we near the conclusion of our Mumbai chapter, we are extremely excited to unveil our special coffee table book. This book captures the essence of our ambitious 10-city series that has taken us across India. Through vivid imagery and insightful narratives, this book chronicles our exploration of Web3 technologies and innovative financial opportunities emerging in today's dynamic landscape. From blockchain and DeFi to next-gen investment strategies, it showcases how these advancements are reshaping India's digital and financial ecosystems. The book captures diverse perspectives from over 100 influential speakers and thousands of participants across various cities. It also delves into an array of topics like cryptocurrency investments, tokenization of assets, AI-driven financial tools, and sustainable investing practices. Serving as both a record of our journey and a roadmap for the future, this book highlights the challenges, opportunities, and potential solutions at the intersection of technology and finance. It embodies Namaste Web3's mission to educate, empower, and prepare India for the evolving world of Web3 and next-gen investments. And to unveil the coffee table book, may I please invite all our speakers, our panelists on stage, and Sumit Gupta, Anuj Singhal, Managing Editor, CNBC Awaaz and CNBC Bazaar as well. Can we please have everyone on stage? We have all the speakers on stage, all our panelists from our discussion. Ladies and gentlemen, I would like to invite you once again to join our community. In case you have missed the QR code, it is on the screen right now. You can scan the code and be part of our family. And well, as we approach the end of our event segment that promises to tie everything together, we will tackle one of the most pressing questions for modern investors. How do we integrate new age investments with traditional portfolio strategies? Through this fireside chat, we will explore practical approaches to bridging the gap between helping investors create balanced, forward-looking portfolios. I would once again like to request Neha to please join us on stage and moderate the session. And joining her on stage is Sumit Gupta and Anuj Singhal. I would request them to please join us on stage as well. A round of applause for both of them. Over to you, Neha.
Hi, Sumit. Hi, Anuj. So good to have you. This is the last session. And the audience will also get an opportunity to ask questions, so please keep them ready. To get the ball rolling, Sumit, let me first come to you. Tell us a bit about this entire new theme that we are seeing, which is taken by excitement, all the retail investors with the cautious approach, of course. Tell us a bit about what really is the strategy and what really they need to be wary about.
Sure. I was given feedback outside that we should talk more about Bitcoin and crypto assets in general as an asset class. And that's the major area of major theme that I'll cover in the responses, right? I started my journey in 2016. And just to take you 8 years back, I was sitting with 7 of my friends in a flat in Bangalore. And these are like my friends from IIT, and we were discussing, asking some of the very basic questions. Generally, we don't question, question things about money. Why do we even value money? Why do we even value that paper which has 500,000 written on it? And it started from there. Why do we even value that piece of carbon like diamond, and why it's so precious? Why do we value gold? And then the discussion went on for hours and hours, from 8 p.m. in the night to 3 a.m. and it went for months and months. And that was year 2016, and that was a close group of people that were not just assuming whatever was told to them by their parents or by their friends. And it was kind of a rabbit hole, and that's how I started my journey. And I started reading more and more about it, starting with the white paper of Bitcoin and about fiat currencies, and how fiat currencies used to be backed by gold, but now it's not backed by gold anymore. So your value of the fiat, which is INR, US dollars, Japanese yen, all of that you hold, is actually losing value with every passing year. And now, with COVID, and all of us have seen that, what happened during COVID, trillions of dollars of money getting printed and still happening, right? That is the time when, a lot of people who used to believe that, the store of value, our hard-earned money, right, should not actually lose value over time, right? What you could purchase with 1,000 rupees few years back versus what you can purchase now is like, there's a huge difference. And one thing led to another, and those group of 7 people essentially shared knowledge with each other. We started questioning our belief system that, okay, what's going to happen. And that's how, my belief in Bitcoin, I was a bit skeptical at first. But then when I started reading about it, which most of the people don't, so I think when I started reading about it, I was sort of fully convinced that, okay, this is the future, and this is an asset class which is going to emerge. It's right now maybe put it into alternative category, but it is going to become, a very, very valuable asset class that people will value. For example, and because of very fundamental properties, right? A lot of people value gold, like my parents used to value gold, right? So for people of my age or people younger, if you go and talk to them on the ground, they don't relate themselves to gold, right? They are more tech savvy, and they see Bitcoin as the next digital gold, because the properties of Bitcoin and gold are similar. In fact, Bitcoin is a lot better than gold because you can carry it, you can divide into as many parts as possible. You can't create Bitcoin out of thin air. In fact, gold is an asset class that you can, get. But Bitcoin is essentially the only asset, only asset which has a true capped supply. You can't create it. It's all written, it's all proven mathematically. So that's how I started my journey, from a skeptic to someone who is a deep believer. And now I'm venturing into the space. It's been 8 years. And the purpose is that how can we spread the knowledge and education, like I mentioned at the start, about this new asset class. And all of you, just one thing, because I want to make sure that every single one of you read about it. Just go to YouTube, read about Bitcoin, how it originated. It originated out of the 2008 financial crisis, and that's how Bitcoin originated, because it, it solves a very fundamental problem, right? And then that essentially is going to change a lot of your beliefs. And I think that's going to be a life-changing moment for all of you, like it has been for me.
Anuj, I know that you do investor camps all over India. You interact with investors firsthand. Tell me a bit about this new age investor. This investor has a high risk profile. They are very well aware about what's in the market, what's doing well. What are some interesting trends that you see in your interactions that you would like to highlight?
Well, Neha, first of all, I think Sumit spoke about Bitcoin being the best asset class. I think you get a good equity brokerage head, he'll convince you why equity is the best asset class. I think you get someone from real estate to tell you why real estate is the best asset class. You get someone from gold to tell you why gold is the best asset class. I think the good thing about the new age investor is that he or she has an open mind. I think they are willing to take risk. By the way, Sumit spoke about the fact that they started in 2016, and I think kudos to him because, he would have seen so much. There was a time when Bitcoin in India was not legal. I think there's been so much that you have seen, and, and to stay through with your dream all through this. So congrats on that, first of all. But I think I have never invested in Bitcoin. I was just talking to him. Me and him, we are in a WhatsApp group, but before today I had not met him, but I have met him today, but I have virtually met him through a WhatsApp group. So there we had discussed Bitcoin, but today is the first time that I'm meeting him face to face. So I also till now have not invested in Bitcoin, but obviously I don't classify myself in New Age. But since your question was about New Age, I think as I said, the New Age investor is willing to take a lot of risk. My only worry about the New Age investor is that this New Age investor has not seen any market crash of any level. I think this New Age investor has come into the market post 2020, post COVID. They have seen only highs. They have not seen, I think, where someone like me who becomes a bit of a skeptic is, I've seen the 2008 crash. And I've seen how, at index level, index fell 58%. The small cap index fell 78%. Individual stocks fell 98%. I'm not saying that something like this is going to repeat. But, everywhere I go, I just hear that, okay, this is here to stay. There's just so much money chasing stocks. And when, you talk about valuation, nobody's willing to listen. It's like, I mean, there was a bank which was bailed out by the government, and, if you look at its market cap, ROE and all, it absolutely not making any sense. But nobody's willing to talk about that right now. My only worry is that, the real test of this new investor will come if, something hits them. Even for Bitcoin, for example, Bitcoin has gone through phases where it becomes 10x, then it falls 90%, then it again becomes 80, 90 times. So I think these are all the challenges. I am more of a conventional guy. I believe that, I keep my money, some part in real estate, some part in gold, some part in equity. I like to diversify. I think, but the new age investor is going to go where the return is the highest. He or she is going to chase that. And if Bitcoin is going to do that, more power to Sumit and to the Bitcoin.
The first thumb rule of investing is always to diversify your portfolio. That has been the golden rule of investing. Coming to you, Sumit, this question was one which someone from the audience wanted to ask you. More and more investors are diversifying their portfolio with crypto assets. In what ways are crypto exchanges catering to this demand? And what is the critical role that crypto exchanges play in transitioning users from traditional finance to Web3?
Sure. So the way I look at it is like banks play a role. Banks are the entry points for anyone who want to get into the financial world, right? You sort of have your rupees and you deposit money in your banks, and that's where you start your financial journey. That's more of a fiat economy, right? There is also a crypto economy on the other side. That's when it's more decentralized. It's something that is unaffected from any centralized institution and any government. And the journey to that, the journey to a decentralized world starts from crypto exchanges, because crypto, generally, like, people use the word crypto, but it is based on cryptography, right? Which is the foundation of blockchain technology. All are highly interconnected, and you can get a lot of information available online on that. And the journey to that side, the journey to a world of blockchain, the journey to start their crypto journey starts from crypto exchanges. They are like the banks in the Web3 world, you can say. And that's the role I fundamentally feel exchanges play, because that's the first point of contact if anyone wants to get exposure to the Web3 industry or crypto assets. And that gives a lot of responsibilities to us, and right all the way from making sure that your platform is extremely simple, because it's a complex industry, and that is the reason why there are roughly, by the way, 400 million people globally who have invested into this asset class. 400 million is roughly 5% of world's population. It's still very early, but it's not like very little number. Exchanges play the role of, people call it like on-ramp, off-ramp. They play the role of gateway for anyone who wants to enter into the Web3 economy, which is parallel to the fiat economy in some sense. And that gives them responsibilities, like they have to make sure that the platform is extremely simple because it's complex, and you have to make sure that customers are not getting overwhelmed. It has to be fully safe. People are putting their hard-earned money. So you have to make sure that the platform is extremely safe for the customers, and they can park their assets, very, very securely and for long term, like how you park in banks. And the last and the most important is also the compliance part of it. The industry is new. It has, by the way, just one correction, it has always been legal to buy and invest in crypto assets, and it was also communicated by the Supreme Court. Unfortunately, in India, there has been so many misconceptions around this industry, and that is also part of our job, to make sure that we educate people, burst the myths that are there. So many people I see, so many people. There are a lot of fundamental questions that people have, and with events like this, we try to educate more and more people around it, right? And that is the one of the job that we feel it's our responsibility that we have to do, and we have to do it across the country. We have to make sure that people invest with the right fundamentals in mind. Of course, there are certain people who invest without understanding it and just imagine, oh, I'll invest X amount and it will multiply 5x, 10x. That is wrong mindset. That is not how it should be done, right? Diversification is the right approach. There are different asset classes. I personally look at equity, real estate, gold, and crypto. And all, like, crypto is also liquid, pretty much liquid. If you look at the top 10 assets globally, Bitcoin is number 10 there. It's like compared to Meta, $1.3 trillion. It's not a small number. It has proven time and again that it is an asset class that is liquid. It is an asset class, of course, it is volatile, it is risky, but it has always come back. And as the asset class gets more and more matured, the volatility and all of that reduces.
Sumit, I have, sorry, couple of questions for you. Sorry, Neha, I know you are the moderator, but
please do. Please do.
Actually, it would be interesting if we.
No, I couple of questions for you. One is taxation something which is prohibitive? And two, you can correct me if I'm wrong, but there was a time when I think 5 or 6 years back that I used to look at cryptos. The bid and ask used to be haywire. There used to be a lot of difference between the bid price and the ask price, which is not the case in, say, equities and other asset classes. So both these cases, if you want to answer that.
No, absolutely. Very, very important points. And at least that will help clarify some questions that audience would have, right? The first part, I'll take the bid and ask part first. When I started my journey in 2016, the bid-ask spread used to be around 10% also, yeah? Because there were very few exchanges, the liquidity was not there. And now the bid-ask spread is 0.1%. Okay. Right? Yeah. So the bid-ask spread problem, and now it has slightly increased because of the taxation, because the market dynamics are like that. There is 1% TDS. So the bid-ask spread ranges around 1% approximation right now, and that 1% is actually refundable. So anyone who pays that 1% TDS, you can actually claim it back. A lot of people don't know that. They feel that 1% is gone, right? The spread problem is solved. It was not solved 8 years back. And actually that was one of the reasons why, because I wanted to invest in this asset class and I used to use a couple of other platforms. There was high bid-ask spread. I was like, no, I'm giving more money to them than the profit I'm making. So let me start a platform which essentially solves this problem, because there are lakhs of other investors like me who were paying very high fees. And then we solved this problem by aggregating liquidity, and that solved the problem for spread. The taxation part, so 2 years back, until 2022, there was no
guideline around taxation on this asset class. But government of India has released that there is a tax framework, which essentially is good because it gives more confidence to people that, okay, there's a tax framework, they can declare it in their tax filings as well. And the component are three. One is every time you make a sell trade, there is 1% TDS that gets deducted, but you can claim it back. And the interesting part here is a lot of people think that if they are buying and holding, this 1% is not applicable, right? So that's good thing. So if you are an investor, long-term investor, which I believe, I am more of a long-term investor, right? So if you are an investor, long-term investor, this 1% will not hit you. And that is applicable only when you sell your assets, and that is refundable. The second component of the taxation is 30% capital gains. When you book your profits, you'll have to pay 30% gains on the profits. And the third part is set off. In crypto trading, when you want to set off, right, the set off of losses is not allowed. And this is a tax framework that is not very, very positive for the industry because the industry is new. And I'll tell you the reason as well, because a lot of people relate that, okay, the nature of crypto because it's volatile and all of that. But the real reason being that in 2021, you would remember that Elon Musk and some of the other people have started talking about some of the meme coins, right? And there was a lot of speculation happening, and it has happened in equities as well, right? A couple of decades back. So because of that, and the asset class is new, government wanted that, okay, let it be controlled growth, right? And that is the reason why taxation was not very supportive, but it is still there. And we believe that any kind of clarity that comes to an asset class is essentially movement in the right direction, because now there is taxation clarity, because otherwise people don't even enter because there is no clarity.
Follow-up questions, Anuj? All right. Due to time constraints, we need to wrap the conversation. But audience, please do ask questions. It would be nice to have Anuj and Sumit answer them. Yes.
Hi, good evening. This is Narendra. My question to Mr. Gupta ji and the panelist. The two things I wanted to ask. The first thing is the crypto is still unregulated industry. It's not been regulated. Like we have equity market and mutual fund market. Now this is my first question. And follow-up question is, how is the safe the crypto is in the long term? Because we have been reading a lot of, nothing against any company, but I'm talking about a specific industry point of view. The crypto are being used by some element for doing the wrong things. This has been published in the leading newspaper also. So my two questions. One question is how we can regulate, because the industry is not regulated. The second follow-up question is how the money would be safe going in the right hand.
Yes, Sumit, it's for you.
So I'll take both the questions. Crypto, about regulations, crypto is an unregulated asset class right now, but there are registrations that are given to VDA SP, which is the service providers who are in VDA sector. And that essentially makes it kind of pseudo-regulated. So there are registrations. Regulation is something that is emerging across the world. Because it is a new asset class, it is risky. And that is why the returns are also a little bit more lucrative, right? But regulation is something, if you follow the trends, global trends, there are a lot of countries globally who have regulated it. There are guidelines in place, and just like how a lot of new sectors are, for example, ride hailing, Ola, Uber, they are not regulated, right? Yeah. E-pharmacy, not regulated, but still we use it. So whenever any new technology comes, regulation comes later on. It never happens that, regulation comes first and then the technology evolves. AI, is it regulated? No. Are there risks? Of course, yes. So regulation always follows. Our belief is that the industry will also be regulated. And just giving you some more statistics, even our finance minister and even within the G20 presidency, there was the declaration that was signed where the government of India has mentioned that they are open to regulating this industry. So it's a function of time. It's not a question of whether it will be regulated or not.
And I think even SEBI has sort of offered to be a regulator for crypto. Yes, so yes. I think regulation is going to happen soon. I think, and as far as I think the other question was concerned, I think that can happen with any asset class, right? Not just crypto.
Yeah. And in fact, one stat, there is more illicit activity that happens with cash. Anyone knows that? Then Bitcoin, I'll tell you why. Because cash is not traceable.
Cash is not traceable. I give cash to someone, you will not know.
Exactly.
Yeah. And
to trace it.
yeah, it's not, and Bitcoin, blockchain is actually the most traceable. You can check it on the internet, on blockchain, any one of you can check it online, or what is the flow of funds. So actually, the amount of illicit activity, of course Bitcoin is used, but the probability of someone finding it, and it has happened in the US, right, is very, very high because blockchain is open, transparent, and is on a public ledger. That is what, why it's so powerful.
Okay, let's take next question.
Yeah, can I go?
Let the lady take first. After that.
Lady always first.
Thank you. That's very kind of you. Hi, Sumit. I have been an active crypto investor 3-4 years back. Made decent money, got my exit. But there had been a couple of questions which had always, worried me. One, I find it a very dark world, honestly. And there are so many, different views from the ministry also. It's still unregulated. No policies around it. Is still very structured. So my first congratulations to you standing against the tide and holding to your conviction in this world of crypto. My question is, a thing like Bitcoin, which is so popular, and the pseudonym Satoshi Nakamoto, we don't know who this person is. So it's a world which is, very confusing, and there's no underlying asset. I mean, crypto, we don't know. It's just a pure thing of demand and supply. So how do you give a conviction to the investor that, their money is safe? And how do you see the roadmap? If you can just throw some light on that, I'll be very thankful to you. Thank you.
Very, should I take it? You can add your
No,
thoughts.
this is for you.
Yeah. So on the Bitcoin part, right? Let me just take that up. Why do people value gold? Why was gold valued? And we've discussed this. Why was real estate valued? These are some of the asset classes which have a limited supply to some extent. Real estate, of course, you can increase it, you can expand, but at least they have the property of supply constraint, right? Same with gold. You can't create gold out of thin air. If people could sort of create gold, then it would not be valuable, right? Similarly, Bitcoin, like I mentioned, is the only asset, and you can tell me if I'm wrong, is the only asset that truly mathematically has a capped supply. You can't create it. Tomorrow you can find maybe 100 tons of gold lying, somewhere. But Bitcoin fundamentally has a capped supply. If this is wrong, then anyone could become a trillion, multi-billionaire by just creating that, right? So that is the only, and that is actually the reason why, because it has scarcity, because it has a capped supply, that is the reason why asset classes get value. Same how gold got value and other asset classes, right? Second, if you look at, and it's not something that it happened over 1 year, 2 years, if you look at the last 12 years of performance from 2011 to 2022, the average return, and again, this is because it's still very risky. The average return that has been there, it has outperformed S&P 500 and gold and any other asset classes. The average return was around 210%. Right? Again, this is so high because it was risky. If people who are getting in now, of course, it's impractical to imagine that you'll get that much. So that is and it has proven it over the last 12, 14 years, right? Relatively shorter time period, but still not 2-3 years. And it has gone through various ups and downs. A lot of people have been skeptical when it was went down 2 years back, but now it is back up again to $60,000. And the thought process that if gold is at $15 trillion market cap, right? And if Bitcoin follows for the new generation in the same trajectory, and then people can accordingly decide how big it can become or how small it can become. So the historical performance has been in favor and has outperformed various other asset classes. And another reason to that is at least to me, as global uncertainty is increasing, as countries across the world are printing more and more money, as inflation is happening, and this is time and again proven, countries which have higher inflation have actually adopted Bitcoin a lot more. You look at, Turkey, Venezuela, all of those countries which have seen adoption. On the ground, those people have adopted Bitcoin, so it is seen as a very strong hedge against global uncertainty and as a strong hedge against government's instability.
You had a question? Yes, please.
Can I go now? Yeah. So it is a 16-year-old asset class. You mentioned it is born in 2008. So it's going to become major in 2 years' time now. So cannot be called as a new age investment or a new asset class. That's one. Can you make it like this, that it is crypto and not currency? Why? Because currency, I can go back to bank, the Reserve Bank, Central Bank of any country. I can exchange that to the value that is promised to me on the note. I can buy goods and services. Only thing that it is supply scarcity that is taking the price up, but there is no intrinsic value to my understanding about the crypto. How will you answer that?
Yeah, sure. So I think your first part was 16 years and it's still new. So I mean, like, again, a lot of people would say that there are other asset classes which has been there for a longer period. So of course, I would consider that as
recognized. They are recognized by regulators, economies, tax laws, everyone. This is still not recognized. So you can't call it 16-year-old boy as a newborn child.
Yeah, some of
my perspective was that when I was saying 16-year-old.
Sure. So there was a question about currency and asset, right? I'm of the opinion that Bitcoin is more of an asset class than a currency. Even everyone, and even government of India has also mentioned that cryptocurrency is a misnomer. It is not cryptocurrency. It's crypto asset. Government call it virtual digital asset, right? So that is the first part of it. And government across the world are gradually regulating it. And even some of the smaller countries have sort of also recognized it as a legal tender. Of course, every country has their own perspective. But if you see some of the developed nations, all of them have favorable regulations for this industry. And by the way, Bitcoin, I don't know how many of you know about Bitcoin ETF getting approved? There are Bitcoin ETFs. Lot of these institutions like BlackRock, Fidelity, VanEck, all of them have exposure in Bitcoin. Of course, it has been there and it has passed the test of time, and that is the reason why even large institutions are taking exposure, because that's what the market needs. And in the coming years, I would not be surprised if it becomes quite mainstream. I think the only thing that is hindrance and why we need to do things like that is because regulations are not there, right? So once regulation comes, it will become more and more mainstream and more people will start adopting this asset class.
Anuj, would you like to add to that?
I think, frankly, 16 years is still young. I mean, I think real estate has been there for hundreds of years. Gold has been there for so many years. I think equity market, we all know, have been, I mean, most of these asset classes were there since any of us were born. So in that sense, I think 16 years is still, I would still call it new age. I mean, there's absolutely no doubt in my mind that this is still new age investing.
All right, we have quite a few more questions to go, but I'm told we are completely out of time and I need to wrap the discussion. But I guess we can interact with both the speakers off stage, if that's okay.
Yeah.
All right, one last question.
Hello. Sumit, my question is for you. See, there is a price difference between two coin exchanges, like Coingecko and Coindcx. If you see the same price on Coingecko, Ethereum price, and Coindcx exchange, there is a price of almost 50,000 rupees on a single coin. So how do you differentiate that?
Yeah. So that is basically because of the arbitrage that exists between domestic exchanges and international ones. And the reason is because Bitcoin is not mined in India. So because Bitcoin is not mined in India, it is a demand-heavy market. There is more demand that comes from India, but supply is not there. And that is the reason why in India particularly, the premium exists. Within all Indian exchanges, you will see the, within all the Indian exchanges, you will see the same premium. And this premium essentially is because the regulations does not allow people to get source of supply from countries where mining is happening, right? And that is the reason why it exists. And similarly, like in gold, if you buy gold from UAE and if you buy gold from India, there's a difference, right? There's a difference of 5 to 10%. I don't know the exact number, but I think the same pattern exists. And this premium is actually going down. When I started this, the premium used to be 10%. Now it is roughly 4%, 3 to 4%, 5% during volatile times. And it will converge to maybe 0.5% or 1% over time. But that's because the asset class is new and there is more demand than what the supply is there in India.
All right, with this, it's a wrap. Anuj, thank you so much. Sumit, thank you so much. Thank you, audience.
valuable contributions. In fact, all the speakers for their insights, and we had a great, all the sessions were great. Hope you have joined our community. Those of you who have missed it, please scan the code and join the channel. With that, ladies and gentlemen, we come to the end of what has been an evening filled with so much learning and sharing. Thank you for being such a wonderful audience, and we sure hope that you've gained valuable insights today from our Unlocking Next Gen Investment Opportunities Namaste Web3 event. Thank you. Enjoy the rest of the